Hey everybody, Courtney Smith here. Let's talk about gold. And what I have here is a unique chart here. This is the price of gold here. You can see the nice rally we had recently, and we're currently in a bear move right now. But there's another indicator underneath here that it can be very valuable at times. And what this is this is the bullish percentage. The bullish percentage is that percentage of advisors that are bullish. So you can see it oscillates here. We saw March early this year, we were down to like 5%. Everybody was bearish. But when we saw that major rally recently, you can see here that they were very bullish. We were at 100% during some weeks. Now, typically what happens is that when the market is in between these extremes, like if it's not down at 10 or up above 90, the market just follows the bullish percentage just follows the market. But when we see the bullish percentage get up at 90% or more, or at 10% or less, that bull market or bear market is about to end. So we saw that right in here. Here we got up to 90, and as soon as we got up there, we were getting close to the end of the bull market. We got up to 90, close to the end of the bull market. Now, it doesn't call a top, but it says once you get up to there, then you have to say, wait a second, I have to start looking for reasons to get out of the positions. Okay, so the ideal time to buy is when we're down at these lows. That was an excellent time to buy. An excellent time to buy. And this chart goes back to 2018, so it's got a lot of data. Look at this. Gets above 90, excellent time to sell. Now, what about where we are right now? Well, right now, we're here at about 60. So 60% of advisors are bullish. That means that there's lots of room for this market to go up or down. So which is it going to be? Well, you can see we start out with this low here in March. We rally up, we come down, we rally up, we come down. The next move will probably be to the upside. And we know that there's going to be a nice big bull run because there's lots of room for these advisors to go from 60 up to 90. Once we get up to 90, we have to start worrying about whether or not we want to stay long or not. But this shows that the next bull leg in gold will once again rally up probably $200-300 an ounce again. So this is telling us it's all clear for a bull market. And once the fundamentals get back bullish again and we start to rally again, we'll probably gain another couple $100 an ounce, maybe $300 an ounce. Now, am I still bullish over the long run? Well, yes, I am. Because when the Fed comes out and says that we are shifting from a target of 2% to a target of maybe 2%, but we'll just average it out at 2%, which really means they're going to go to 3% or 4%. All of those things mean those are bullish for gold, massively bullish. Now, one other factor. If you remember, I got out and became bullish on gold as we went into August. Why? Because August is the most bullish month of the year for gold. It's when the wholesalers buy their gold and then they turn around and manufacture jewelry for the Indian wedding season in September, October, November. Let's call it October. Well, the problem is that the market is selling off right now because the demand is not there. Because of COVID, there are very few weddings taking place. So that's created a pent-up demand for gold. The wedding season, the brides want the gold, but they're not being able to get married, so there's no demand for the gold. They don't get the gold that comes during a wedding in Indian wedding season. So what's going to happen is that there's this pent-up demand. Now, when is that pent-up going to demand? When is that going to be released? Well, unfortunately, I don't know. But every day I read a minimum of one Indian newspaper in order to keep on top of this one factor of when will the COVID lockdown be released in India. As soon as I read that in the newspaper, I'm going to turn bullish on gold. Okay, the foundation is being laid by the Fed's policy, by the ECB's policy, by the Bank of Japan's policy of zero interest rates. But we need the spark. Now, one spark, the most important spark, would be the release of COVID lockdown in India. There's another spark, and that will be Chinese New Year coming up in February. Now, notice that there's a very good chance that we will see the COVID lockdown released and Chinese New Year occur very close together. If that happens, we're going to see a rally in the price of gold of maybe $500 an ounce, maybe even more. So those are two factors to take a look at, to keep on top of, to catch the next rally in gold. Hey, you're here on the YouTube channel for us because you know you get unique, totally powerful analysis of the market, and you don't get it anyplace else. Subscribe, like, do all that stuff. See you later.